Hey guys, welcome back to the channel. Today I'm going to be discussing Cardano on the weekly chart and going over my thoughts on the price action as well as where it is headed over the next few weeks and months. So if you're new to the channel and you want to show some support, please leave a like and subscribe. So on my chart I have this band of indicators here. This red line here is the 20-week simple moving average, and the green one is the 21-week exponential moving average. And the exponential moving average just weights the most recent candle close more heavily than the others. So it is a little bit different. So I really like this band of moving averages because it really defines the difference between a bull and a bear market. And what I mean by that is, as you can see, during a bear market, this is the key level here where we are constantly rejecting, and ultimately this is where the lower highs tend to occur. So you can see how there was this key lower high in April of 2018 at 40 cents, and then that was followed by a new low, and then we came back up. We didn't even reach the band this time. We came very close to it, but this was the next lower high that we formed at 20 cents, and that led to new lows, right? And we had some sort of fake out move here where we tried to get back above this band here, and ultimately we did. We had a few candle closes above it. It was looking good, and then we fell back below it. We held it as resistance, and we had this long consolidation phase that was kind of this period of time where it was pretty bearish, but we hadn't formed the new low. And then we came back above it. We had this failed breakout again. We never held it as support on the retest of it, and that ended in this March capitulation down to 1.7 cents. And then the key difference here, all of this was during a bear market, and some would call this an accumulation phase, and this was the real key bear market. But the key difference here is that when we got back above it, we started holding it as support, right? We were trending back up, taking out these lower highs, and we started holding it as support. And on the way up, every step of the way, when we came back down for these short-term corrections, we were holding it as support, right? And that really caused us to go vertical all the way up to a new all-time high at $2.40. And during this phase here in October of 2022, we actually had two candle closes here that were slightly below it. But that's really the difference here, is that it was only two candle closes, and it was very close to this band of moving averages. It wasn't a key rejection. We didn't fall too far below it, and we generally maintained this as support. And there was a similar event here in July of 2021 where we had two candles that closed below it, but only one of the candle bodies was fully under it, and we quickly reclaimed it, held it as support, and formed a new all-time high. But now that we're below it, you can see it has been holding as resistance. We had a key rejection here in January of 2022 at $1.60, and another key rejection here in April of 2022 at $1.20. So you can see how the lower highs correspond to rejections off of this indicator, and what we have right now is new lows forming. And if I just draw this general downtrend, you can see each new low is formed after its subsequent rejection off of this band of indicators. So what we really want to see is for price action to reclaim this level and hold it as support. And we don't want to just get back above it and have a few candle closes above it. We need to hold it as support, because if we don't hold it as support and we just fall back below it, then we really made no progress. And ultimately, what happened was we had this failed bull break that had very little momentum and enthusiasm. So what we need to see is for price action to get back above this. And if you're curious, it's currently ranging from 88 cents all the way up to 92 cents or so. And since this closing price today is far lower than it was 20 weeks, right? If we go back 20 weeks, we can see the closing price was $1.40, and right now we're closing around 60 cents. So these moving averages are going to continuously move down unless we start closing candles upwards in this range. But in the short term, that is over 2x the price we are now, and it doesn't seem very likely in the short term that this is going to start moving up anytime soon. So as this is coming down, we want to see price action reclaim it, hold it as support, and start trending back up, taking out some of these lower highs, such as the one at $1.20, and ultimately targeting this $1.60 lower high. And when we are able to do that, whether it be now or in a few months, that will define the distinction between when we shift from this bear market phase to a bull market phase. And that's generally what I'm expecting from Cardano. And whether or not that's today or in a few months, that's just what I'm going to be watching in order to get excited and bullish on Cardano. So now I'm going to switch to the Cardano Bitcoin chart, and I have this same moving average here. You can see two key rejections here as we've been below it. And this chart is slightly different considering that is valuing Cardano against Bitcoin and that ratio instead of the US dollar. So this chart could be moving up when Cardano is moving down in USD. It's really just showing the opportunity cost of holding one asset against the other. So I want to start by outlining this key level here that we are currently bouncing off of. So if I just go back to this July of 2021 candle here, this was the high of the entire year of 2020. And as you can see, price action has formed this nice little bottom off this. We're seeing a little bit of follow through here with a plus 17% green candle off of this low and off of this 2020 high. And we're coming back up closer to this moving average. So you can see we've already rejected off of it twice. And if we are able to get back above it and hold it as support, then Cardano could start to outperform Bitcoin, and that would ultimately lead the USD pair to be more strong, right? And that's really the key. We want to see that. We want to see Cardano have some relative strength in the market, especially compared to Bitcoin, when Bitcoin is sort of dominating most of the market. So that is the end of the video, guys. I hope you did enjoy. If you have any video recommendations, any comments, any feedback, I really do appreciate those. And as always, I will see you in the next one.